Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Monday, August 26, 2024. It is 12:53 p.m. Eastern Time, and here's what we're going to do in this one. I'm going to start out with, as I often do, a brief overview of the markets, update levels to watch. There was a question put in the last post that I made, and then just a flurry of them on Friday, mostly trollish type questions. I'll get to that in a second. I don't typically respond to any of those, but one of them was just a statement, but also what I'd consider, I mean, there were a lot of false statements in there, but one of them is about bearish engulfing candles. I'm going to address that one, which I did. I addressed it in the as a reply. But let me start out here with the quick update, and it'll segue into the question under the post I made this morning. Mike had asked about could you get levels to the trend lines? I think that's what the question was. And so what my answer was is trend lines you don't have. I cannot give you a price level when you're watching, be it an uptrend line or a downtrend line. Trend lines are dynamic, meaning every day, every second, every minute, the levels come in at a different price level. So all you can do, my reply there is go in and replicate those trend lines. You know, look at where do they come off. Trend lines will either touch the majority. I try to go for the majority of candlestick bodies, which are the fat part, and or the shadows, the skinny part. Doesn't matter. When you know, trend line drawing is more of an art than a science, I'll certainly say. So replicate those. But the most important thing is, if you are not using log scaling, I have log scaling on just about all my charts, all my time frames. It's much more, it's really the only way to go. A lot of charting platforms will default to arithmetic, aka linear scaling, and you want to use log. Sometimes I'll call it semi-log scaling. It just puts all the price changes, the moves, in equal percentage terms, because the reason is if you're charting a stock, especially on a longer term chart with a lot of price history, and you go back years, it was at $10 a share. Now it's at $800 a share, or let's just say use a round number, $10 and $100, and it's currently trading at 100. And you're looking at trend line when it was $10 a share, every 1 point it went up was 10%. When it's 100 a share, every 1 point or $1 goes up is now only 1%. So log scaling corrects for that and gives you a true picture of the performance of the price. So very important. And then again, so when you're watching a trend line, looking for a buy signal, a breakout, or a sell signal and a break below an uptrend line, they come in, they're dynamic. So go ahead, replicate them. You can do that on, of course, futures as well. And even if you don't trade futures, I highly recommend you chart them if you're trading the indexes. And a company like investing.com, I believe Schwab's Thinkorswim platform. Most brokers will give you free futures real-time charts, including investing.com. Even if you don't have an account, you don't have to have an account. You just create. Yeah, you have to, I guess, access charts, but it's free. All right, and then I went on to say what I also did give you on Friday when I gave you these new uptrend lines here that have formed and developed are what I call BOD levels. So in that video, I highlighted here 473.77. I said a break of the trend line, although it would be a sell signal. This is the first, my BOD level, benefit of the doubt. When you have two support levels or in close proximity, you want to give the benefit of the doubt because, as you guys know, if you traded for a while, whipsaws are pretty common. A whipsaw is when you're watching a well-defined, a chart pattern, bullish or bearish, and you have waiting for a buy signal and a break above, whether it's price resistance or a trend line resistance or support. You get a break of that only to see it followed by a move back above that level. So again, when to give it the benefit of the doubt, you have two levels close by. When the second level goes, that's when the odds go up. And that's what I said yesterday, that Friday. 473.77 should do the trick. I highlighted that there in that video. And so that's what, so far it's support. And I 100% expected a reaction. And unless it goes, then it's not going to open the door to the next level. Now, we do have a pretty impulsive clear breakdown, so I think it goes. It's just a matter of now. So this was a check mark today. Now it's a matter of, do we back test, in which case we might get an objective add-on there, a re-entry, or do we go ahead and break down? But either way, this is the next support level that needs to go, and it will significantly, if this breakdown in itself, which I believe it does because it was fairly impulsive, is a break of the wedge. No two ways about it. It hasn't failed yet. May not fail. May fail, meaning a failure would be a solid move back in there, a solid 60-minute close back up in the wedge. As of now, it's a breakdown, and then you take your measured target of a wedge, which is the widest point of the wedge, which you do on a charting platform. You just take a trend line, measure the widest part of the wedge, and add it to where the wedge breaks down. That gives your measured target there. So the odds of this wedge breakdown hitting the measured target will go up significantly if and when 473.77 goes. Now, let me throw something else in there that's going to muddle the charts. You may not want to hear this, but this is how it works. NVIDIA is reporting Wednesday after the close, which is it's take it like a Fed meeting combined with Apple earnings and all that combined. NVIDIA is the poster child, I've been saying for a while, of the AI hype bubble, undisputed king, right? It's also now the second largest component of the NASDAQ 100. I'm showing on my, sorting on my watch list. You can see here, I've got the market caps. It's right behind Apple. Apple's 3.4 trillion, Nvidia's 3.1. So it not only has that psychological importance, also a big mathematical importance on the index. We're going to get to Nvidia. As I take this video down, we'll end up talking about the semiconductors, particularly Nvidia. I'll do what I often do. I play the game where when a stock's reporting, I'll make a call, how it's going to, what's the trend going to be coming out of earnings, not the minute they report, not even that afternoon or evening, but where is the next 10% plus coming from? And I'll get to that in a second. We'll get to that 1 minute. So with that being said, this is in a perfect world, 473.77, break of that, a sell signal is going to solidify this sell signal here and increase the odds. You're going down to at least the measured target, and quite likely if that starts to happen, then we're going to have rolled down. Remember, this is where pretty much that bounce, as per the video last week, should be stopping around here. If not, you hit that escape velocity and you're probably going to pop new highs. Look, NVIDIA is going to make or break it. So I could sit here and talk right now, which I'm going to do for 30 minutes on the charts, show you levels to watch, trading ops, all that good stuff. But it's all about NVIDIA. If you're a risk-adverse trader, I know that's an oxymoron to an extent, but if that's what you are, or less aggressive, then you want to sit aside and wait till see which way NVIDIA goes. I'm going to get to that chart along with other semis in just a second here. But sometimes you got to pick a side, especially when you're going to have a big move in the market. So I'll just say it one more time: the market's either, if it's going to punch out the new highs anytime, if it's going to take out the previous highs, which still mark a top. I'm going to get to that also in a second. It's probably going to do it either this week or in the following week in the wake of NVIDIA's earnings. If the ultimate move following earnings, again, not the initial knee-jerk reaction the night of or the morning after, but in the days to weeks to come, if that's bullish and NVIDIA is going up to new highs, it's going to take the market with it. If not, which still my way, I see the charts right now, then we're going to resume this counter trend rally will be over, and the next leg down to those longer term price targets I have will have begun, and most likely will have begun in earnest. So we'll get to that in 1 second. So, but right now, look, there it is. That was the level we hit. Highlighted last week. Needs to go. It's the BOD support. It's a good support level, and more importantly, if I said thought it was support last week, and we broke down with the one of the most impulsive candles over the last week, other than this one here, straight down to it, hit it, and have danced on it all day since. Each of these candles, right above it, then that helps to additionally validate it as important support. It shows me that I wasn't the only one watching that level. Other traders have stepped in and covered their shorts from the breakdown, active traders, and are waiting for that level to go, or they're stepping in buying there. So it's like any support level. When you pull back to it, you can view it as a battleground between bulls and bears. Right now, the battle's ongoing. If we do this, especially if we get back above the trend line, bulls win. If we break down, bears win. Again, for the near term, these are battles. The war will be won. It's not even, we'll see. NVIDIA is going to have to be out of the way, so we're not going to know till later this week, because again, that's Wednesday after the market closes. All right, enough on QQQ. Let me get to NQ. I already gave you ES and everything else today. Same thing. This is my NQ 60-minute chart. This is the trend line I gave you on Friday right here. And again, this morning, it was in Friday's video with a sell signal to come on a break of it. Remember, it's a 60-minute chart. These are just intra-period breaks, no sell signal. You need to see a solid red close below, 60-minute candlestick close print below, which we got there. And then you got the impulsive selling. And we went right down to that level I said would need to be taken out. During the video, I put that line on there for you and said this would be our BOD level. It's just below 19,543, and we hit it pretty much to the button, a brief overshoot, and you can see we've been consolidating on it. So again, and I replied that to Mike in that reply. So the trend lines you have to replicate because I started highlighting this one back here. We walked up it. We continued to hug it into this morning, started hugging it on Friday, and then we've had a breakdown shortly after I got those out to you today. Good for a quick, I don't know, 1% or so drop. I didn't measure it somewhere. No, maybe more than that. Yeah, close to, from the breakdown, about 2. Nice 2% drop. But then what do? We hit the first good support level where I would have been surprised if they didn't buy, and they bought. And they're buying it right now. It's got a little flagging action. Based on the impulsive nature of the breakdown, I favor that it will go. But as a trader, you have, at this moment, there are 2 objective things to do. Those bullish will buy it. You buy 19,543 support with a stop somewhat below or wherever you want. Or if you're bearish and expecting to break, then you wait for it to break. But you don't short right now. You short here. You shorted here this morning when we broke down here or there once you saw it, and now you can short there. Those are your objective moves to make. Again, charts are dynamic. They're constantly evolving. Maybe we get a back test. But you're going to have some noise here this week. Right now, if you look in and kind of just eyeball it here, you've got this trading. Remember, it was support back here. That's why I highlighted it was support again right here, and it's support there. So you've got this little box we're trading in. You're going to have one of 2 things. If there's more nervous shorts in NVIDIA right now, most of the shorts probably have been blown out. But if they're more nervous shorts, you'll probably see some short covering before earnings, maybe bulls that are optimistic they're going to blow the cover off the ball. But you probably see more nervous longs. Why? Why did I say that? And that they'll sell NVIDIA before, because we've technically already broken down here, and that's a thing. It's happened. But again, so if we take this out, then that's where you'll get probably some more nervous profit taken on NVIDIA. So those are your big levels to watch. ES, I already showed you too. That one broke down. It's not super far below it, but it is definitely below the trend line, and it was impulsive. And there's your big red candle. That's what solid close below. Hit that first support level, and just like QQQ, they came in and bought. That's what you're going to see. So now let's go to the economic calendar real quick. Big heavy economic calendar this week. You had durable goods today. Came in way above expectations, but they actually sold it. It was just a big ramp up on mostly autos. I think it was cars, a lot of car builds over that period. Consumer confidence, to me, that's a coincident indicator. It goes up and down with the stock market. No predictive value there, in my opinion. GDP is obviously a big one, but GDP always is and has been it's subject to revisions, and so only in hindsight, well after the recession started, then it's widely acknowledged by many. That's when they'll come in and start making backward revisions to GDP, saying, "Oh, it wasn't as strong as we thought it was," and so the recession actually. Sorry, guys, I'm talking about the NBER. They're going to come and tell you that well after the recession started that it already did, because they go back and revise that. But jobless claims, that can move the needle. But again, NVIDIA is here. You don't have it here on my chart, but NVIDIA reports. That's so you can also, where you access this, under Tools of the Trade, under Resources on the top menu of the site, go to Resources, Tools of the Trade, and you have the economic calendar, and right next to that, the earnings calendar. And so let's roll into NVIDIA. Before we get into NVIDIA and the semis, because I want to finish the video there. That way, I'm going to start out with NVIDIA, cover SOXX, talk a little bit about that. I just wanted to make mention that crude oil actually just hit the last level I highlighted short. So I think it was right here we went long, rallied up, exited with impunity at the high, caught the low, sold the high, got out. I highlighted here, positive divergent low, rallied up here, and then said back there it was a short from this point up to the downtrend line would be your short scaling zone with the preferred target of hitting the downtrend line, and boom, it certainly was. That was probably at least, I'm sure, a double-digit drop. I wanted to say we came full circle. We put in a divergent low, just like we had a divergent low right here. You can see all the divergences. They're not labeled, but you just look. That's a divergent high, which is not a sell signal. What was a sell signal was the break of the trend line. We had a divergent low there. We got a nice rally, divergent low, another nice rally. That was actually a small divergent high there at the trend line. Correction, divergent low, took out the trend line, but boom, there we are. Now, so the short zone is from here, from the trend line, about where we are now, up to this point, this previous reaction high, because when we got there, I said it wasn't just the downtrend line, which, by the way, I had that downtrend line drawn in advance, looking for a objective short entry to get there. And the fact that was before we got there, the fact that we hit it and hit it twice and got rejected hard helps to additionally validate it. So it's certainly a level. But so was that reaction high. And at the time, I was telling you that we also had the top of my yellow zone, I think it is. Yep, top of my yellow zone. Remember back here, I gave you these boxes and told you the crude would have the inflationary impact on the economy, and this is a yellow zone. Orange zone, when you get in there, it starts making a big difference. That's where the stock market starts to pay attention to rising crude, and boom, we did. We had the stock market had one of the biggest drops in years there, and again there when we got to the top of the orange zone. But that level also acts as, and this is why I'm highlighting here, that was that previous reaction high. It was also not a random level. It is resistance. And so that's what gives you on USO, which is the crude ETN, gives you from here now, because you're at that downtrend line. Here, I'll draw it for you here. There's the same downtrend line I showed you on crude up to right there, about 79. It's a small window, so it's a objecting short area with a stop somewhat above. The only thing I prefer to see, which we don't have on CL, is negative divergence. You don't have to have that. I just wanted to point it out if you want to take a pot shot at crude. It's a relatively small shorting window with a stop somewhat above. And at that, you can either game a quick pullback on it off that level or just trail stops down, see if you can get a runner trade. There's still a lot of geopolitical risks right now going on in the Middle East, so you don't fall in love with a crude short. I'm just pointing out an objective trading up and giving you an update on crude. And while I'm on crude, I'll just update natural gas. The previous levels that I had, the price targets are gone because the contract rolled. We're now on the October's contract. So every time the futures roll, I have to redo, and the price levels change too. So even if this charting platform kept the level, it can't because they're new price levels. It's a new contract. But you can see here that was I think T2 or 3 from the previous trade. We hit it with negative divergence, had a pullback, and we're right back to our breakout point. And that's where we were last week. I just want to update. We've been consolidating on this, which is still an objective entry. I'm not as crazy about it as back here because we're just coming off the divergent low. Again, this is a chart I had to replicate and give you new levels. However, I still can make a case and still like it. I would just have a stop not too far below the recent lows here, and these are your targets, right? We already hit that one, so we should go through it there. Next targets right there, and there. That's your update on natural gas. These are the futures. UNG. Let me see. I marked it up. Let's see here. 60-minute chart, there it is. So if you remember the setup here, R1, it was a breakout above this downtrend line right here, was the same one on the futures, and I called it R1S1 popped above it, and so we're right back, came full circle. We hit T3 right there, came down, this was T1 right here, and so there's the same targets, although I always say, as you can see on the chart, best to align your UNG targets with those on NG, natural gas futures, because that's what UNG is tracking. They're rolling the futures. So the price levels are going to change over time on UNG because you're buying and rolling into different futures contracts as time goes on. And remember, the whole point of that trade is this $2 level right here. This is nat gas futures, a longer term chart. You can see the years down here as we go on. This is, year break lines 2024, 23, 2022, 2021 right here. So it's a long term chart. I'm going to zoom in a little so you can see the levels. Again, covered it with that previous trade, but right here, $2 is a good price support. You had that major reaction low right here. You had a reaction low there. You had a major reaction low right there. So it's a decent long-term support. And that was the case for that. There's even better support down here about 150, but we bought that 150 low previously. We had a trade there as well off that based on, again, long-term support. And look, we still have, again, the case that I've made for a longer term, a potential triple digit gain on natural gas. So far, we've had double digit gains on this trade and the current one. And there's that big positive divergence at that recent low. And so if we can hold above $2, start to rally back up, we should go on. And again, I showed you the previous trend off these divergent lows down around this level. 207% rally, 563%, 234, 158. Hence, you can understand why I'm talking about the potential for a triple digit gain off this divergent low is 224%. All right, so that's your update on nat gas. Don't fall in love with it. I call her the widowmaker. She will hurt you if you let her. So, we're pretty much at that breakout point and we're at long-term support and, there it is. Okay, now we're going to talk about NVIDIA QQQ. Like I mentioned, there was a comment from Friday after I left town that I saw today, and I replied to about bearish engulfing candles. How there's been a lot. I know for a fact a lot of those, in there with those trollish type comments. Do not listen to my videos. I say this repeatedly, but it bears repeating because again, people post this stuff and then other people read it and say, "Wow, man, yeah." Yeah, that sounds right. There's been a lot of bearish engulfing. Bearish engulfing candles mean less than zero. They mean absolutely nothing unless they come at the end of a prolonged uptrend, i.e. bull market, just like a bullish engulfing candle. They are very common. They come in the middle of trends. And so any that we've gotten since, for example, NVIDIA, as I highlighted, I made the point while I was on vacation in Italy to shoot a thing out to you guys. Hey, looks like right now we're going to print a bearish engulfing candle in NVIDIA today. And on top of that, I gave you a trend line break, which to trigger additionally validate a short entry. So that is clearly end of a prolonged uptrend. And so that's when you want to look for them. So that, along with the ones we got more recently in QQQ and the semiconductor sector and many, many semiconductor stocks, until unless proven otherwise, meaning unless we go above them, I'm going to treat it as what it was meant to be, a potential topping stick. So again, any others that come in the middle of a after if it doesn't come at the high, at the absolute high, it cannot be a topping stick by definition, or reversal stick. And they're very easy to trade. And as I said in that reply, they're one of my favorites. I'll take them over and over again, and I don't care if you're stopped out 5, 6, 7 in a row. NVIDIA put in plenty there, and it doesn't matter because the RR is phenomenal. When you take one, your stop is just above the bearish engulfing candle. It's so easy to see it that day if it comes at the right point. And as I said, not just at the end of an uptrend. I want to see, as we had, negative divergence, overbought conditions, market breadth deterioration, all the other things that I was highlighting up to that point, and as well as when we put them more recently on the stock market on QQQ, those are the criteria. So I wouldn't just short a bearish engulfing candle if I couldn't make a pretty strong case. But when you can, again, your risk of loss is you're talking a couple percentage points because you're going to short it when you see it forming before the close that day, and you're going to have a stop over that high. Or you can even be more conservative and wait to the next day. So follow up red candle to confirm that it put in a top there, and that's it. Now let me take it a step further. Let's not forget, not only was that highlighted as a short entry, as well as the breakdown after, we covered the lows, the very exact low. So win or lose, it's already a winner. This is not. It was a 34% drop, the biggest drop NVIDIA had in years, I think. And so because of it, we were short at the highs, and because of many other factors, including and not limited to that, the shorter term price target being hit there, and that on the daily chart too, the primary uptrend line right there. So it's foregone history. I think a 34% drop would qualify. Now it may not qualify as the. It was good for a short, and again, for all the reasons highlighted that morning, hard out, cover all shorts, go long. It's successful, and so there it is. So let's not even talk anymore on it. However, it won't be the end of a significant end of a trend, because this is the uptrend preceding it. So only time will tell. Now, this is where I'm going, guys. I'm going here with NVDA, the stock market, and the semis, which that's one of my favorite sectors right now, I think, on the short side. And we're going to know, guys, we should know by the end of this week, certainly by next week, which way we're going. In other words, whether or not this marked the end of a bull market, bull run in NVIDIA, and that this so far 34% drop was just the first wave down, with a counter trend bounce and more downside still to come. Remember, back in late June, before we topped, I gave you targets. I gave you a market top zone, meaning I was expecting more upside then. We got more upside in late June. But on NVIDIA, I laid out four current price targets with a potential fifth target, which I'll most likely be making official. When I put the word potential in front, it's a target that I'll determine that if and when this starts to play out. Before we hit T4, I'll make that official or not and say, but you know me, I'll list multiple price targets. But this was T1 was hit. That was right there, the week of the low. We covered it at the low. It was the 200-day moving averages and every other reason in QQQ, Amazon app, all the big tech stocks hitting the 200 days. And so that was it. So basically, there was the divergent high, wedge break, first target hit, and the reason I list multiple targets, upon the initial tag of each target, I expect a reaction, or the odds of reaction are elevated. That's the reaction. And the $1 million question, are we going to get this? We will know soon. We should know soon, because they're going to report. And so if not, then it's going to go down. And when you can consider it, I can tell you right now, first of all, the trade, we covered it, T1. But if you are playing the long game, and I'll speak to that part, that shorted that bearish engulfing candle back here on the daily chart, and you're playing the long game, you decided not to cover there, whatever, then, by definition, if you shorted because of the bearish engulfing candle, your stop should still be above it. They haven't gotten it yet. You go above it. I'll say it. I don't get ridiculed from the trolls. It'll be a divergent high, and then we'll be looking for the next sell signal. So divergent high is not a sell signal, it's a condition. Then you have to look, do you have an uptrend line, or you're looking for another reversal? There's different candlestick reversal patterns. Bearish engulfing are only one. You can look for island cluster tops, island tops, all kinds of evening star dojis, all kinds of crazy. There's a myriad of things that we can look for. So that's it. As of now, like I said, unless proven otherwise, we'll treat that as the top, that as the first target hit, a level to where a bounce was expected, and we got. And then we'll see what happens following earnings. And there's a big old thin zone. If you can see it in here on the volume of price histogram bars, all the way down to T3. So as I've mentioned recently with QQQ and other things, although I had a very high degree of confidence we would bounce there, hence the hard reversal, meaning all shorts covered in all long-term accounts, everything going all long, full long position. Different this time. We get down to T2. It's going to be a little bit different, because we will have then broken the 200-day moving averages. I can see, it's a reaction. It is support, but it's not super strong support. So therefore, as I always say, charts are dynamic. So let's just assume we start to approach that level. I may decide to sit tight, because we may just go down through it. And of course, if and when we get there, I'll let you know. Now, if this thing just goes up, takes out, and there's no reason to be short anymore, you can't make a case, then we'll just have to address and add new targets later down the road. If you're bullish, going into earnings, just know that it's going to go one way or the other. Same thing if you're short and bearish, it's going to go one way or the other. And so I'll play that game that I always do based on the this weekly chart, the breakdown, the divergent high, everything I covered there, going off the fact that this has the potential to be the end of the bull run and the start of a new bear market, with this just being a counter trend bounce. And the current technical posture on the 60-minute chart. Let's remember this was also a reason for covering, because my third target was hit that morning. We had just a flush out panic selling in the futures, everything going into the open. We covered in pre-market just before the open. So we actually got it down here, reversed, and went long there. And so again, that was, remember, my final near-term swing target. So not only did we hit my long-term initial T1 swing target based off the weekly chart, we also hit this final swing target on the 60-minute chart that I gave you back then. So now, okay, we've come full circle. There was also, as I like to see, to cover shorts and to go long, positive, aka bullish divergence. It was a divergent low right there. There's your indicators. Just like this was a divergent high when the bearish engulfing candle came on the daily. Trend line break right there. Trend line break there. Those were sell signals. Now you can see here's the current technical posture. So where I'm going with this is that game I like to play, and you know, it sets me up to eat crow, but I do it. I always say, if a stock heading into earnings, if the chart pattern to me isn't very clear, if the chart doesn't look clearly bullish or bearish, and again, not the current trend. I try to predict trends. I don't chase or follow trends. So, you know, a stock can be at all-time highs or all-time lows, and if it's at all-time lows, I might say the chart appears bullish because it has strong divergences, overbought conditions at long-term support. I've seen, you know, breadth improvement, market internals improvements, and so therefore I might predict that you know, is going to go up in earnings. But in this case, you can see here's the technicals. I already went over what's on the daily chart. Remember, weekly and daily chart where we put in divergent highs at the highs as well as bearish engulfing candles on the daily. So that kind of sets the bigger picture. So then that tells me, or at least I'm going off the assumption, right or wrong, I'm going off the assumption this has been a counter trend rally. Again, one that we predicted and, you know, profited from. And now, based on the technical posture of the charts, the negative divergence here on the 60-minute chart, and we still have the divergence from the highs there. You're not going to have, you don't get weekly divergence, negative divergence again now unless you punch out to new highs. And so you have it down here on the 60-minute chart. And again, it doesn't guarantee anything. I trade in probabilities, not possibilities. And so that's it. So based on this, and that's just a little 60-minute chart. And this, you know, here we are flirting with the downtrend line off the highs. It tells me the odds favor that coming out of earnings will be the catalyst for the next leg down. And if you're going to take a short position, I happen to have, as I told you, I did scale back in to puts. I have puts. I rarely trade options. I just bought straight out puts, no collars, no spreads, nothing hedged up. I said, here's the amount, because NVIDIA is so volatile and explosive. I don't want to I put in the amount that I'm willing. That's how if you wonder how I did, how much I figured to do, I just said, you know what, here's what I'm willing to, if I shorted the shares, I'd have X number before I had shares short. And if my stop loss, let's just say, was going to be 8% or whatever on the trade, then I just calculated what would that loss be in shares, and that's how much I threw in. So look, if the puts expire worthless, I lose not a penny more than I would have lost shorting the stock. And again, it's kind of a rough number, but that's where I'm at on that one. So I'm going to go now. I may layer on some shares as well, short individual shares after earnings are out of the way, but I'm not going to. The VIX dropped down to peanuts lately, and that's when I like to buy options. I am a buyer of options when the VIX, historically, I'll trade them often, but I don't buy options when the VIX spikes. I sell options. In the past, I've done that. So calls, puts, you have the premium, volatility premium surges when you get a high VIX. But when you're down here, options get cheaper. There's no, when the volatility is low, the VIX is low, volatility is low, and the volatility premium's a lot lower on those. Of course, your individual stock needs to have low volatility or be in an uptrend, like NVIDIA was recently. So, and I've covered this quite a bit lately. This was the reason for going long the VIX last time. We made what was it, 50% on the VXY trade. Obviously a lot more if you went with VIX futures. But this is the weekly chart. So we're back to that. The whole basis for going long before was same basis. Actually, we never made it back down. I'm sorry. We went long off long-term support before. And whether this current, and I threw it out there again, you may want to be in it again. We're back down low. We did it on a daily chart. These were the previous targets there, and these are the targets I gave you for the next time around. So before we had T1, 2, 3, 4. At that point, I officially closed out. That was the 50% run we were in right here at the lows, right there, right before the breakout candle. And that was a 55% run. Well, to the target, it was 50.70, 51%. And then, we hit that T5 the next day, and that capped it. And as I said, it's based on my analysis. I think that's the initial shock wave, like when you get an earthquake, it's that pre-tremor, whatever they call it. I'm not in earthquake valley here. I'm in Florida. We had one a couple years ago. It was rare. It was a Caribbean earthquake, and we felt it here, but usually we don't have those. So either way, you know what I'm talking about. So this is quite possibly just the initial pop, and then we may get that. Either way, the VIX is still low right now. So, and it's going to look, if NVIDIA knocks a cover off the ball, the VIX is going to stay low or go lower. Remember, this is just an ETN. You're going to look at VIX, the spot VIX. And where to? Well, if the market's going to pop the new highs, we're probably going to come back down to where we bought it last time down here. This is long-term. Remember, this is the long-term support zone. Otherwise, this was the initial pop-up. And if NVIDIA disappoints, again, it doesn't matter what their earnings are. I say this also every quarter. They can blow the cover off, but they're going to always, they tend to always beat most of these big tech companies. They are experts at managing expectations, and rarely do they miss. It's not about whether they miss. It's what the market's reaction is. And again, not to the initial earnings report when it's released, but whatever guidance or whatever color they give in their if they're doing a conference call after, that's when you can see a big reversal. All right, so all we know, that's it. VIX is low, going to go lower if the market's going to pop to new highs. I already gave you my thoughts last week, what my trading plan is. And now let's get to the semis. Okay. I showed you the bearish engulfing candle on NVIDIA. This is SOXX. It is chock full. NVIDIA is obviously biggest component in here. I don't know by weighting, it's by market cap it is. You can go to iShares site and see what the current weightings are, and I would encourage you to do so. But either way, this is just a basket. It tracks the PHLX SOXX semiconductor index. Been around forever and a day. I've covered it many times. And so just like the stock market back on July 11th, put in a big fat bearish engulfing candle. And again, so to respond to that comment, that this is the one that matters. None of these others that came in here. There was one the other day. It doesn't matter. Unless they come in a top, it's not a topping or a reversal stick. There's no trend to reverse. You're looking for the big trend, not these little micros. Well, this is just little near-term trends. So that's the one. Unless taken out, I'm treating that as most likely a top in the sector, and we'll see. Maybe it's not. Maybe it's just. And again, say what you want about it, but it foreshadowed a 28% drop, a drop in which at that point. We covered, and this was one of the things I had, and it's all shorts covered and hard long. So it may prove to just be the top for that correction. That's all that is, guys, by the way, is a correction. It took us back to the downtrend line, slight undercut of the 200s, but again, the majority of market leading stocks at that time hit or were in very close proximity to the 200s, and most remain above it. So I consider that a successful test, just like this was a successful test. I'm talking about the 200-day moving averages. And remember, this is, of course, is an ETF that's tracking a basket of stocks. But typically when you're above it, it's bullish. And the trend has been, you come in a bull trend, you check it, and you go to new highs. So that's why I think, guys, if we take it out again, as I keep saying, if we undercut the lows again, you're going to clearly be below the 200-day moving averages. Most stocks will be, most semiconductors will be, and then the market will most likely realize the 200s gave way, just like back here. Remember, we undercut them, we rallied back above. We undercut them again. Once it became clear, and it was right here after that second undercut, that the 200s were now gone, boom, there was another from that point after we cut that low out, the whole sector fell another 32%. So that's it, guys. I'm not trying to beat a dead horse here. This is a big week. NVIDIA is going to make or break this thing, most likely. And just rifle through there's their daily chart. So there's levels to watch. As I've repeatedly been saying, the recent lows are big levels. If, let's just say, I know I might have come across as like this scenario is a little binary now after NVIDIA, that we're either going to blast on to new highs or go down here. And I shouldn't talk like that. That's not necessary. That's, like I said, if we are going to go down, NVIDIA's chances are it's going to be the catalyst that sparks the next leg down. Likewise, if we're going to go to new highs anytime soon, it will most likely be. But let's just say we meander around for a little while. It's kind of inconclusive. What you can see here, see this LS? Where they had that's a potential left shoulder. There's a potential head. We're forming what could be a right shoulder. So if we do reverse, what you want to look for is and by the way, of course, it's called a head and shoulders pattern. For those who are not familiar, it's a potential topping pattern. And so what you want to see, ideally to have symmetry, you'd see a little more formation. That's why I'm saying a little more if we can grind around. And you don't have to have, sometimes you get perfect symmetry, but you don't need, and you don't often have perfect symmetry. You just need that rough symmetry. Again, the thing is, the head has to be higher than the left shoulder and the right shoulder. And symmetry means the shoulders should roughly form about the same. Now we could start going down. But, and if we grind down, then you would have nicer symmetry. You see that? That's what I'm showing you. Go straight down. It'll still be a left shoulder. And then the thing is, you have the neckline here. So let me share, as I like to share, not just this whole technical analysis thing, but how I trade these patterns. Bearish engulfings, as I answered in that question that was put out there on Friday, how the bearish engulfings aren't working. You get a lot of them. And again, none of them matter but the ones that come at the top. But my reply was they're the best. I mean, because again, when you short them, your loss potential is a couple percentage points if you waited to the end of the day and shorted there. Like on this one, for example, I'll measure it out for you. Let's just say you waited right at the close and you shorted, or a lot of these you can get ahead of midday. See, it's going to form unless there's a big rally. So I like to, if I can see them forming, I'll get in earlier. But let's just say you waited to the close or the following day or whatever. You could have waited to the next day. You were still below there. But if you waited to the close, the upside was 4%. So you had about a 4% loss potential, right? If stopped out, because your stop's going to be above the high of the candle. And you turn around, you made 28%. And you made it because, again, that's where you would have covered and then you would have reversed and made, again, I didn't milk. I keep saying this, and these, the trollish comments don't get it, that was a hard reversal. Cover all shorts, go to a full long position, quote unquote, in quotes. This was a scale in. Now I'm talking about QQQ here, not a hard in, because there's not been, I haven't seen any hard evidence of reversal, but I am seeing building evidence. I'm seeing, remember I told you I have these uptrend lines on most of the market leading tech stocks and the semis. That was on, what was that, Thursday. Big red candle. That's a check mark. That's a breakdown of a very well-defined trend line. And again, the semis, I will repeat, are one of my favorites right now. If we are going lower and I'm right, the semis are going to outperform. You're going to make more money on a semi short than you will on QQQ. You'll make a whole lot more on SOXX than you will on SPY. QQQ is probably will fall more than SPY. because it'll be tech. So there's your some evidence that the counter trend rally is most likely run its course. It's going to get better when we take out the 200s, but it's going to get great when we take out the recent lows on SOXX. Why? Because you'll have taken out the 200s. You'll have taken out the primary uptrend line. Again, that uptrend line comes off this October 2022 low with that additional validation recently. And then you turn to long-term targets, which are, I've got this long-term uptrend line. So I'm on a weekly chart now, and I'm going to just rifle through. I'm not going to spend too much time on the dailies because weekly paints the bigger picture, just so you know what keeps me talking about the more downside. And and it takes a rally, again, a rally that was predicted, anticipated, to get the trolls to come out, and they come out at the end. So Friday after I left town, I could see it's a field day for them. And this is it. So these are the long-term targets on NVDA. I've already covered primary uptrend line. So again, we just got to get down and take out the recent lows. You're going to have taken out this primary uptrend line on NVDA, the 200-day moving averages. I already commented about T2, how any reaction I'm suspecting as of today, again, assuming we can get there, will be minor, if any, and we may go on down to T3. Let me just measure that out for you guys. So remember, these levels were created back when I gave you these targets, when I gave you those market top ranges and the long-term targets on SPY and QQQ back on June 26th. So that was 64% from then. From now, it would be where we're at now. To get down to T3 is going to give you about a 60% drop, and so forth and so on. Let me just go over the rest, because NVIDIA, as big as it is, it's not everything. The semis right here. On TSM, Taiwan Semi, these were my old targets from the last bull market top. T1 was hit. T2 was my current final target, which was the uptrend line and or the nearby 60-ish level. We hit them both to the button, reversed. Again, covered, reversed, and we had this big rally. So those were, as I said back then, potential. That's the difference. Potential means just, if I would have revised T2 before we got there, that I'm going to extend it and make this official, but there were too many reasons to cover and go long there, including and not limited to. It wasn't just TSM, the second biggest semi. It was NVIDIA also hit. Again, these targets were laid out back here. Give you a short. T2 was hit, and so now these are your current targets here for the next drop down. Taiwan Semi also has, when you're looking at it, okay, so if before we even hit this trend line, I'm talking the primary long-term trend line that comes off the 2009 lows, if back here when nobody wanted to short semis, I thought that was a trend line that was a likely target. The fact that it got hit and we had an explosive, nothing short of an explosive rally and a perfect reverse off it, further validates that as a very significant level, because I thought it was an important level back here before when we were up here. So that's my point, is now that is also another potential target. You can see this former T1 is support, 84.20. It was support. It was my first target there, but again, before when we were way up here. So the fact that we hit it, and then we had, as you can see, I'm just sharing you guys, this is how I do technical analysis. This is how you identify support, resistance levels, and price targets. So again, it was a level I created back on February 3rd of 2022. That's up here. And the fact that once we hit it, we did bounce, right? Came down, cut again, flirted around it, and then when we clearly gave it up, big leg down to my next target, and then look what happened on the upside. Remember, I always say support once broken becomes resistance. Perfect tag, rejection. That was double digit, by the way. That's a big drop right there. It doesn't look like much because there's a big, huge move in here. And look what it also came in with. Yep, you got it. 200-day moving averages. So boom, they hit them, reversed, took them back there. That's good. Once they took it back, where'd it go? This was my support level in which to trigger the short right there. Hit it, pulled back. Came back, tested T1, which is now technically support. Once again, support. Went back up to, that's why I called it R1, S1. Again, created that back on February 3rd, 2022. You can see it there. It was support here. Support once broken becomes resistance. So guys, this is it. This is how you trade. This is swing trading. And these are big moves. This is just bouncing off those, just trading it off those levels. You're talking the range there from high to low. That's 22%. And so you short, you take profits on your long there, short, go back, buy it there, buy the 200s, buy price support, rally up, and then boom, wait. And the way it works is once you get a breakout and you don't have to squint to see it, that was a massive green candle, solid close above. That says boom, we had a multi-month trading range, about a year long. That was a breakout. And it took us up to this next level. So here's where we're at now. We've come full circle, just like back here. The catalyst for that drop of 60% roughly in Taiwan Semi. What did it take? It took negative divergence on the weekly chart, was your technical catalyst, if you will, the fuel or the the indication you were going to have a trend reversal from a strong bull market. Your sell signal came when the 200s, and then most importantly, my R1S1 level went. Now we had a bearish rising wedge followed by a divergent high, followed by not a little limp through, but an impulsive breakdown there, which is a sell signal. And what I'm viewing, fully expected and reversed when we hit the 200s. I didn't have Taiwan Semi per se, but with QQQ and everything else. That's the expected bounce off the first visit to the 200s, which I was calling for a pullback to, the initial swing targets, followed by a bounce. And so if we go down, now we take them out. There's your next stop. And I haven't, again, these are, you can trade off the old levels that I gave you back here before, because they've been further validated by everything I just showed you. So if you want to short an individual name, you're an options trader, and you want to predict if my call is right, when we're going to get there, it's going to happen probably faster than most think. I'd say, just looking at this, we could be there in 2 months, 3 months. That's the nature of how stocks, they fall faster than they rise. I always give yourself a little more time. And look, are we going up? Guess what? Then what you want to look for is, if we go up, how far do we go up? If we go up here, guess what, guys? We no longer have negative divergence. The PPO is going to move up. The RSI is going to move up. And it doesn't mean the stock can't then turn around and do that. It just makes it a hard case to say, wow, that's a bearish looking chart. It looks like we're going to reverse. All right, let me rifle through the rest of them just so you could just eyeball the levels if you want to trade any of these individually. Here's Broadcom. Here's a history. I mean, look at this. This is every time they split, these lines move. That was a divergent high there. But you can see this purple line, your primary uptrend line, comes way off the 2009 lows, like a lot of these primary uptrend lines I have. And I think it's a likely target before all is said and done. And just to kind of quantify it for you, and I know a lot of you are saying, oh, you're crazy, smoking something. That'd be almost a 70% drop, depending if and when we get there, 68%. It's not going to get there until we get some evidence that, again, first evidence is going to be the 200-day moving averages getting taken out. I haven't measured the previous drops, but I can tell you that's in line. A lot of semis do drop 70% or roughly. NVDA has a history of doing that when the cycle turns. All I can tell you definitively is we're coming off a divergent high, and you can see what happened and this is a weekly chart, and last time, these are all double digits. You can go back, measure them on your own charting platform. So that's it. And that's just, again, a longer term target. We'll see. These are near term targets. ASML. So here's a common thread. Look, even if you're like one of those super long term, the market's always, it's going to go to the moon, and the Fed will never let another recession or correction happen. This is just bullish, actually, guys, to expect a pullback to these trend lines, which I plan to buy if and when we get there, because these are primary secular bull market uptrend lines. So I'm a swing trader. And so I'll swing these 41%, 60% corrections, if you will, within or cyclical bull markets within a larger secular cyclical bear markets within a larger secular bull market. And that's it. So we had beautiful beautiful. Big red candle, solid sell signal off a well-defined uptrend line, following a divergent high. First leg down, most likely. This one's currently back testing the 200s. Tried to punch above them. It's still below. Right on them right now, really. We'll call it a back test. And so, where we go in the next few weeks is either going to make or break this case. If more of these stocks get up and away and recover, especially those that are below their 200s right now, if they get clearly above them, then you know what, we're going to put in a new high, and maybe it'll be a divergent high if it happens anytime soon in most of these, but it could also get taken out, and then we're like something else is going on, but something that it's not in the charts right now. It's not what I see in the charts. It's just not the technical posture of the markets, not what's going on fundamentally. But there's a beautiful uptrend line in AMD. I want to point out AMD, one of the big semis. Last time it had a divergent high was right here. Dropped from there about 70% roughly. Oh, no, I'm sorry, I overdid it. 67 roughly, 65 call it. That divergence wasn't reset. In other words, it was right here. It's only gotten larger. And that 70 or 60 something percent drop just took us to the primary uptrend line. This is the primary uptrend line off the 2015 lows. We're flirting with it again. So if this one and this one's back testing, it clearly has lost the 200s, and it's back testing right now. So if we get rejected, you can see I have a few different there's my BOD trend line, the lowest one there. Take that out. That's going to be a break of a long-term trend line. We're going to go a lot lower. So you can see technical posture is similar, a lot of these. That's kind of the takeaway, guys. We had divergence at those last highs in 2021, late 2021, early 2022. We had a 50+% drop in most of these semis, like Qualcomm right here. They went down. This was a target I gave you right here on December 15th of 2023. It looks like I would have added that one there, and it's still a target I maintain. It's the next stop. We ended here with a big divergent low right there. Bullish breakout of the downtrend line. We've come full circle, and this one looks like it's flagging here right on the 200s, you can see. And I know I'm on a weekly chart. If I'm confusing you, these are 40 period moving averages on a weekly, same as a 200-day moving average. And so that's still, and I have additional targets there as well. T3 would be the primary uptrend line. So that's it, guys. Kind of in a nutshell, and we'll know after NVDA if things get ugly. If they don't, we'll revisit these later. But as of now, if NVIDIA is going to be the catalyst to spark the next move down and take out the recent lows, that's going to open the door to deeper downside, you can see these targets here. And this is a beautiful uptrend line. And it's one that hasn't been visited since 2019. And to visit that trend line and keep the larger bull trend intact, we have to drop 60% from where we're at today. And that would be from the recent highs, a total drop of roughly 70%. Texas Instruments. Well, there's your primary uptrend line. That's why I have these in purple. A lot of them come off the 2009 lows. Texas Instruments clearly broke it there. Drop. Put in a divergent low, big positive divergence there. But we also, on this thrust up off that divergent low, that was a technical catalyst. The divergence that was in place there has only gotten larger. Very big negative divergence. And from a bigger picture, this is simply a breakdown and a back test. We're back testing the primary uptrend line again that comes off the 2009 lows. So if we get rejected here, just from the scope of this pattern, we're probably coming down to these longer term targets I gave you back a year or so ago, almost a year ago. AMAT, big chip equipment maker, big divergent high, trend line break, back tested and rejected so far off the primary uptrend line, off the October 2022 lows. This is the primary long-term secular bull market uptrend line. Again, a likely target in the coming months or even years, but probably months, meaning 12 months or less. But that's going to be a big drop if we get there. And again, I'm trying to look at this chart as a blank slate. I'm not trying to fit what I want, see what I want to see. That's the trend line. I'll say it's not the best trend line, but it has enough reactions there to validate it. Also, you have the 200 days. So again, It's where these stocks, where the semis go. It's kind of make or break week is what I'm getting at here. Make it means if NVIDIA can bring the sector up and get all these stocks that are currently back testing either trend lines like this and their 200 days, or they can move them up there, it firms up the charts, at least for, you probably spark a rally that can maybe put in new highs in the semis. Otherwise, if they crap out, you're simply going to have the breakdown, back test, and rejection. And if the majority of these stocks, especially, I'm going in order here. As I do these lists, I have these sorted by market cap. And so the bigger ones are going to have a higher weighting on the semis. You can see that was Micron coming off that divergent high. ADI, analog devices, needs to break this trend line. Still, this one's healthy above the 200s. It's in a solid uptrend, no sell signals. Big divergence, but no sell signals. It needs to break this trend line here and the 200s, which it keeps bouncing. They keep buying it on the 200s. They sell it when it's below the 200s, and then they buy it when it's above. There's your uptrend line right there, potential target for you. 20% drop roughly to get there. Lamb Research, there's your primary uptrend line, which we're just coming off the breakdown of this big wedge, big divergence. I didn't, it's not all marked here. That's actually a huge divergent high, including the more recent divergence right here. I'm trying to grab this little trend line here. So you got that, divergence if you want to look at it from that right here, that time frame, but it also has been building or getting larger since this point here where we had that drop. All right, guys, so that's it. So my point is I do this all the time. I go over all the components of the semiconductor sector. I look at the individual components, and taken collectively, almost all these charts are telling me the same thing. We have divergences comparable, and actually, I take that back. They're not comparable in scope to, they are if you look at just this last run up. They're comparable to the divergence that we had in late 2021, early 2022 that sent most of those stocks down 50% or more, like NXPI. However, from that point, the divergence never got reset. In other words, this isn't just a new separate individual divergence. The divergence lines on almost all of these have gotten much, much larger. And what that tells or indicates to me is that these primary uptrend lines may end up going on some of those that are closer, not the ones that I have down 70%. Those stocks will probably go down to those. But the ones that are flirting with or in close proximity, based on the scope of the divergences, they may go down. We may go down quite a bit. All right, I think I'll wrap it up here. There's Marvel. I'm just clicking through them now. MPWR, monolithic power. Look at that. There's your trend line. So you can just replicate these if you're interested in any of these or own them. That was a uptrend line right there. There's what I called Ursa interrupted. So actually, it wasn't even a whipsaw. It was we had one weekly slight close below. That was COVID right there. And there's your purple line as a likely target. So the way this one works, here's your near-term uptrend line. It comes off it goes all the way back to the early 2016 lows. So when that trend line goes, and this one's already below its 200-day moving averages. When that trend line goes, you can see my near-term targets. It will be this next uptrend line. All right. STM right on nice support, 28.37. If you're a bull, you buy it here off 20, buy it at 28 with a stop below. If you're a bear, wait for 28 to go, which is what I think is the most likely. Here's one in a trading range, UMC. But now I'm getting to these little obscure names. So let me just stop the video here and get it out to you guys. Cancel that. Let me just move that. All right, I'll stop it here and just loop back to where I started the video at the BOD levels that you want to see. Right here, 43.77. We're testing it right now, 473.77. You can see we're at 473.96. And once that goes, that should open the door to more selling. And I think that favors, I think you'll see some profit taken in NVIDIA for those that bought it, and the nervous longs that just somehow managed to ride through that 38% drop. Probably had almost a near heart attack. And this is with this recovery Oh, and by the way, just from a technical perspective, there's your uptrend line. I mean, look, it's pre-earnings. On the end of here, I told you I'd wrap the video up, but I always say this, that breakdowns that occur right before a company reports earnings, they do have a much higher rate of failure. Now, it'll still be a breakdown. This is a textbook. You got 1, 2, 3 reactions there, 4 recently. You had one last, what was that, Friday's candle. And so this is a very valid bearish rising wedge pattern. Support there. And we break down. This is what I think pre-earnings will probably even do this. We'll probably drop down to that level right there. If we get a breakdown, you can see the benefit of the doubt. Nope, let me move it. There's your BOD line. Why did I do that? Wanted to catch that low and that recent low, 123 about. And there's the trend line. If we take it out and we take out the BOD level, minimum target, that's about a 6% drop. So if you want to try to step in front, thread the needle before NVIDIA reports, you could short that wedge breakdown, make a quick 6% or so, and then either cover up before they report or take it in. You get a little bit of cushion of profit and roll the dice if that's your thing. All right, I'm going to wrap it up here, but these are, regardless, levels to watch that will affect the market if these NVIDIA breaks this. And again, you have to take it with a grain of salt because they report Wednesday after the bell. But, sometimes these things, you take them on faith. Like I said, a breakdown's a breakdown. It just kind of increases the odds of a whipsaw is what I'm trying to tell you, but it doesn't negate the breakdown or mean that it can't play out. Hopefully that makes sense. All right, I'll stop it here. This has been Randy Finney with Right Side of the Chart. Have a great day.